Imagine getting a home loan with an interest rate from a few years ago when rates were much lower, like 2 or 3%. That's the power of a VA loan assumption. So, what exactly is a VA loan assumption? In simple terms, it's when a qualified buyer takes over an existing VA loan from the current homeowner. Instead of the buyer getting a brand new mortgage, they step into the seller's shoes and assume responsibility for the original loan's terms, including the interest rate, the remaining balance, and the repayment schedule. This can be a huge deal considering today's mortgage rates are hovering at around 6.8%. First, find an assumable VA loan. Sellers will often advertise their homes as having an assumable VA loan because it's a huge selling point. Second, buyer qualification. This is crucial. The buyer, whether they're a veteran or a civilian, must meet the lender's and VA's credit and income requirements. They'll undergo a similar underwriting process to someone applying for a new loan, demonstrating their ability to make the payments. Now think credit score, often 620 plus, debt to income ratio, and stable employment. Third, equity payment. Here's a key difference from a zero down VA loan. If the seller has built up equity in the home, meaning the sale price is higher than the remaining loan balance, the buyer will need to pay that difference directly to the seller as a lump sum. This isn't financed through the assumption. So if a home is selling for $400,000 and the VA loan balance is $300,000, the buyer needs to come up with $100,000 in cash. Fourth, VA funding fee. The buyer will typically pay a VA funding fee, which is currently about 0.5% of the loan amount for an assumption, unless they're exempt due to a service-connected disability. Fifth, lender and VA approval. Both the original lender and the VA must approve the assumption. This can take time, sometimes longer than a traditional mortgage closing. Sixth, release of liability. For the seller, this is a critical step. They must obtain a formal release of liability from the lender and the VA. Without this, the original veteran could still be on the hook if the new borrower defaults on the loan. Let's look at this from both sides of the coin, starting with the seller. First of all, there is an increased buyer pool. Offering an assumable VA loan, especially one with a low interest rate, makes your home incredibly attractive. It opens your property up to a wider range of buyers, including those who might not qualify for a new loan at current market rates, or those looking for a lower monthly payment. Next, you could potentially have a faster sale. While the assumption process itself can take time, the allure of a lower interest rate can generate more interest and potentially lead to a quicker sale once a qualified buyer is found. Next, lower buyer costs. Because the buyer isn't originating a new loan, they typically face lower closing costs and don't need to pay appraisal fees, which can be another incentive for the buyer. Now, let's look at the cons for the seller. First, there is an equity gap. If you have significant equity in your home, the buyer needs to come up with that difference in cash. This can limit your buyer pool to only those buyers with substantial savings. Next, you will have tied up the VA entitlement. This is a big one. Veterans, pay attention to this. This is very important. So if a non-veteran assumes your VA loan entitlement remains tied to that property until the loan is fully paid off. This means you won't be able to use your VA loan benefit for another home purchase until that happens, potentially for years or even decades. The best case scenario here is another VA eligible buyer who can substitute their entitlement for yours. That means don't sell to a civilian when the buyer is assuming your loan. Next, the time to close. The assumption process can be lengthy, sometimes taking 60 days or more, depending on the lender and VA processing times. Next, there will be a remaining liability without a release of liability. As mentioned, if you don't get a formal release of liability, you could still be held responsible if the new borrower defaults on the loan. Always get that release. Now let's look at the pros and cons for the buyer. So for the pros for the buyer, first, you have potentially lower interest rates. This is the holy grail. If the existing VA loan has a much lower interest rate than current market rates, you can save a significant amount of money over the life of the loan. This means lower monthly payments. Next, lower closing costs. You generally pay fewer fees compared to originating a new mortgage, as certain costs like loan origination fees and appraisal fees are often eliminated or reduced. Next, no private mortgage insurance, meaning PMI. Like all VA loans, an assumed VA loan does not require PMI, which is another significant monthly saving. And finally, no down payment, potentially for VA eligible buyers. If you're a VA eligible buyer and there's no equity to pay the seller, you could potentially acquire the home with no down payment, just like a new VA loan. Now, for the cons for the buyer. First, there is an equity payment required. The biggest hurdle for many buyers is coming up with the cash difference between the sale price and the remaining loan balance. This can be a substantial sum. Next, there are limited home choices. You're limited to homes where the seller has an assumable VA loan and is willing to go through the process. These aren't as common as traditional sales. Next, assumable terms only. You inherit the existing loan's terms, the remaining loan balance, the remaining repayment period, and the interest rate. You don't get to negotiate new terms with a new lender. Process time. Similar to the seller, the buyer needs to be prepared for a potentially longer closing period. So there you have it. VA loan assumptions can be a powerful tool in the real estate market, offering unique benefits, particularly in a high interest rate environment. For veterans, it can provide a great way to sell their home. And for both veterans and non-veterans, it can be an attractive path to home ownership with potentially significant savings. However, it's crucial to understand the intricacies, especially regarding VA entitlement for sellers and the equity payment for buyers. Always work with experienced real estate agents and lenders who understand VA loan assumptions to navigate the process smoothly. So if you found this video helpful, please give it a thumbs up, share it with anyone who might benefit, and don't forget to subscribe for more real estate insights. Thank you for watching, and I'll see you on the next video.